Okay, traders, in this video, what I'd like to do is walk you through how to use the all-new community scripts, leaders and laggers. Now, one of the most widely used concepts in trading is using market correlation. And what we've done is we've created a script called the leaders and laggers that's available inside the Tickblaze platform. And the purpose of this indicator is to help you understand the relationship between non-correlated and correlated markets. Now, the power behind this script is it allows you to be able to apply the indicator to a base chart and then be able to identify using percentage change correlation across indices, commodities, metals, energies, currencies. You can apply this for equities, futures, forex, or crypto. And what's really powerful is that you have the ability to use it in two different viewpoints. Now, as you can see in this layout, on the left-hand chart, I have the S&P futures contract on the top, and on the sub-panel, I have the leaders and laggers indicator. Now, on the right, I have the exact same indicator, but I have it displayed on the chart panel, so that way you could look at it without looking at the price candles. Now, it really just depends on how a trader wants to use this. You could put it on an independent chart. You could have it on a workspace. You could have it on a solo desktop. It really doesn't matter. It's up to you to decide. But what I'd like to do in this video is I'd like to walk you through what the indicator's done to basically provide you the analysis and then show you some of the settings on what we're doing behind the scenes. Okay, let's get into it. Now, I've already pre-populated it. So the key here is that this is a community script and you're gonna be able to click the link below this video. It's going to bring you into the community and you're gonna be able to read up on the script. You're gonna be able to see the zip file. You can import it into the desktop and into the platform. And then once the zip file and the software has been imported into the platform, then what you're able to do is you're able to follow along in this video so that you can essentially install it and put it on your charts, okay? Now, when you install any indicator or any script, the best place to find those indicators is right-click, go to the indicator, and then go to Add Edit Settings. Now, for this indicator, if you just scroll down, you could type L in the chat box and you're going to be able to see it right here. It's just right for leaders and laggers. Now, I've already got it applied to the chart. So let's just kind of talk about this for a second. The first thing we're going to do is we're going to go over here to the Levels tab, make sure that you have that turned on. And one of the things is that you can change the color. This level is for the zero line. So what you want to do is you always want to set that zero line. If you want to change it to black, you could change it to black, right? Really just depends on whatever preference you want. You can make it thicker, right? One of the things you want to make sure is that the opacity is set to 100, so that way you can actually see the line on the chart. The next thing you want to look at is parameters. Now, this is where the magic happens because what's really, really unique about the software is that there's two settings. There's an info box, and what the info box does is it allows you to be able to look at the strongest and most weakest market. You can change the color, you can turn it on or off, you can design the fonts, etc. But the info box is there to tell you what the strongest or the weakest market is relative to percentage change correlation. Now, this is where it's really unique to Tickblaze. We've really designed this in an intuitive way that it makes it easier for you to essentially find the markets. And, for this example, I've got the ES, the NQ, the Russell, the YM, crude oil, gold, and the euro. But let's say I wanted to add some more markets, like maybe I wanted to add natural gas, right? I can automatically just type NG and it's going to populate the ticker. I can hit single contract and it automatically just fills in the gap, right? You could ultimately come here. Let's say I want to put in, I don't know, like HG, copper. I could go down to copper, hit single contract. Maybe I wanted to apply it with Apple, right? I can look for Apple. I could go down here and I can apply it. I have the ability to literally just type in the little window here, do a search for the instruments, and then basically do that. Now I'm going to hit cancel because I don't want to do that. I've already added all my instruments. Let's go back in here and show you what this looks like. And for the most part, I'm just going to look at correlating futures for this example. Now, you're going to notice it starts with instrument 2. And the reason for that is that you're always going to be able to have your base chart. Now, I'm going to remove the ES because the ES is my base chart. So I'm maybe going to put maybe the 6A in here. Maybe I want to do the futures contract for 6A. And then we can just leave it at that as an example. You don't have to have that, but you can use either one of these if you want. Now, the reason it starts at instrument 2 is because instrument 1 is always going to be the base chart. Now, if you want to put this on, let's say, the dollar index, right, you could do that, and you could compare them against the dollar index. Maybe you want to compare them all against crude oil. Maybe you want to compare them all against something else, right? Let me give you an example. If I want to compare all of these markets relative to the S&P, I'm going to have the S&P as my base chart, and then I'm ultimately going to start with instrument 2 for the correlation analysis. So what that allows me to do is it allows me to come in here and set instrument 2. Maybe I want to put it as, I don't know, platinum. Let's go down here to platinum. Hit the platinum, okay? And then I can hit apply, and you're going to be able to see, it's going to load this, and there's platinum, okay, that little pink level there. Now, what's important here is if I scroll up and I look at this, okay, and I bring this down, you can see that the ES is the pink level, right? And if I go down, you'll see platinum is the blue level. The ES is always going to be the base chart because the base chart's the one on the top. Now, let's just double click the market here for a second and just go into the settings. Once you've added all of your instruments here that you want, I think we allow up to like 16. That's actually 17 because if you're including the base chart, right? And what you do is you go into the settings and you're going to see that it's going to tell you the color, like instrument 1, instrument 2, instrument 3, instrument 4. Since instrument 1 is always the base chart, right? Let's just change this to, let's say, a red. It's always going to be the base chart. You can just find your color. We'll get into this here for a second. There it is. Hit OK. And that way instrument 2 and downward is going to be what you chose here. So instrument 2 would be platinum, instrument 3 would be so forth, etc., etc. Now you can go and set the colors whatever you want, right? And it gets pretty repetitive here. And then ultimately you can just go and turn these opacities to 0. You can see the opacities are set to 0, or you can just uncheck them if you don't want them, right? It is however you choose to set it up, okay? Now, why is this important? Well, before we go into strategy and before we go into ultimately understanding how to use this type of analysis, the other way in which you can change the view, which I've got on the right, let me just go in here and double check. I'm going to make things consistent. Let's go back to parameters. Let's change this to say platinum, because I want to make sure that I keep my base chart the same color. Okay, let's go like that. And essentially what I'm going to do is I want to show you how to get the chart to look like this on the right. A lot of people don't like to look at it like this, like on the left, and you don't want to really have it like that because then you got some chart up here at the top. And essentially a lot of people are just going to have this type of a chart, wherever you want it. You can move it around. Maybe you can change this however you choose to look at your workspace or your desktop. But if you want your chart to look like this on the right, then what you do is you double click the indicator and you apply it onto the chart panel. So you go here, it says chart panel 1. So what you do is you go to chart panel 1 and you apply it to chart panel 1 and then hit apply. Okay. Now you're going to see that it's there, but you can't see it. So what you have to do is you double click on the bars and then you come in here and then you make it invisible. So you go to the y-axis, right? Just make it invisible. Okay, and go like this. And there you go. You make the chart invisible. So what you've done is you've basically just hid the bars behind the indicator panel, and this allows you to look at the market without having the charts. Now, let's kind of talk a little bit about strategy for a second, okay? Strategy is about understanding strength, understanding weakness. And in instances like the indices here, okay, let's just talk about this. Whenever the market is above this 0 line, we're set to have positive percentage change in the market. The market is bullish or bearish, right? Sometimes the market will go above that, and then sometimes it'll go below that. Sometimes it'll just be a trending day, right? However you look at the market, it's all about strength and weakness. But when they all cross the market on these 0 lines, or when they all dip below the 0 lines, especially for correlated markets, when you're thinking like the ES, right? The NQ, right? The Russell, right? The YM. these are all correlated to some degree. And you're going to notice that there's going to be strength and weakness. Like the Russell is the weakest market. Out of these 4 markets on the last trading day, if you were trying to buy the market in a strategy and you were looking at these markets, this would give you the worst probabilities because you're trading the weakest market, right? If I was trying to buy a strong market, I would look at buying the S&P because it was the strongest market after it crossed out over here and it became the strongest market across all of them, right? Now that also goes true is that I try not to short the market when we're above the zero line because we're in a stronger market. We're actually showing strength. And you definitely don't want to look at shorting the strongest market. If we were going to short any market, we would look to short the weakest market because it has the highest probability of giving us weakness. Now, another thing we can look at doing, okay, is understanding what to expect when the market decides to change its pace. If I'm expecting, let's say, the market to really sell off, right? And if, like, let's say we're trending to the upside, and then all of a sudden the market starts to baseline like this, what I'm going to be paying attention to most to determine if we're going to go down will be the S&P. It's the strongest market. So if the S&P is the strongest market and it starts to drop, it's going to pull the weaker markets down faster. Same thing here. If we're going to the upside and then all of a sudden the Russell starts gaining extremely good strength, I would expect that to pull the other markets up because once the weakest market is no longer pulling the market down, it's going to basically enhance the strength of the correlated markets. Now we're going to be doing some pretty advanced training on market correlation and understanding strength and weakness analysis across the markets. But if you take a look at this, you can ultimately see as well that crude oil, okay, was pretty weak, but it was also stronger than gold and it was also stronger than platinum. I would look at correlating energy markets with energy markets. I would look at correlating metals with metals, and I would look at correlating indices with indices. Sometimes you're going to see an inverse relationship, right? If you look at the S&P relative to crude, or if you look at certain gold in the markets, sometimes have an inverse reality. So like sometimes the indices will be bullish, you'll see the gold market will be bearish, and then vice versa. But ultimately, at the end of the day, technicals are going to be driven by fundamentals, and therefore it's really there as a guidepost in understanding what's happening across the board, okay? Now, what we can do is we can do some deep dive training, but the first thing I suggest you do is go into the community under the script section, read the analysis. Our dev teams have posted a write-up on this indicator, and you'll be able to see the raw source code as well as the zip file. If you're a developer, you can ultimately extend on the code, or you can use it and expand on it with your own analysis. But if you're just looking to use this indicator the way that we've coded it, you can simply just download the zip file to your computer, go to the tools section and just go to import resources, and then import that zip file into the platform, and then you'll be able to find it inside of the platform, okay? So click the link below if you haven't already done so. Go into the community, get this access. If you have any questions on how to use the tool or help on installing it, or simply just strategies, right? Put a request, put a comment in the YouTube below, and basically let us know what your thoughts are, and we'll be more than happy to potentially do some live training on this as we progress through the year. Take care, traders, and have fun with the leaders and laggers.